So there's two types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm. And then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are two different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it. If they closed the stock market for 10 years and we owned Coca-Cola and Wells Fargo and some other businesses, it wouldn't bother me because I'm looking at what the business produces. If I buy a McDonald's stand, I don't get a quote on it every day. I look at how my business is every day. So those are the kind of assets I like to own. Something that actually is going to deliver and hopefully deliver to meet my expectations over time. A piece of art, may go from $1,000 to $50 million, but it's dependent on what the next guy wants to pay me. The art itself, the painting itself is not going to dispense cash. So I have to find somebody that's going to like it more. And with an asset like gold, for example, basically gold is a way of going along on fear. And it's been a pretty good way of going along on fear from time to time. But you really have to hope people become more afraid in a year or 2 years than they are now. And if they become more afraid, you make money. If they become less afraid, you lose money. But the gold itself doesn't produce anything.
Well, speaking of gold, though, we're looking at gold prices, and they were at another record high. They're up another $3 today, $1,434 an ounce. And there have been some big hedge fund managers, like a Paulson or a David Einhorn, who have really buckled down on these bets. Why would you steer clear, and do you think what they're doing is the wrong thing?
Well, I just don't know. I don't know where the cotton's going to go. I mean, we use a lot of cotton. I've watched it go from 80 cents to $1.90. We use a lot of copper, and I watched it go from $2 to $4 plus. So, I mean, there's all kinds of things in this world that are going to go up and down in price. Maybe hamburgers will tomorrow. But I don't know how to judge that. I do know how to judge, to some extent, the earning power of some businesses. And the real test of whether you would like it as an investment is whether you would be happy if it never got quoted again, and just in terms of what the asset did for you. I would say this about gold. If you took all of the gold in the world, it would roughly make a cube 67 feet on a side. So if you took all the gold in the world, we could have a cube that went down there 67 feet, 67 feet high, and that would be the whole thing. Now, for that same cube of gold, it would be worth, at today's market prices, about $7 trillion. That's probably about a third of the value of all the stocks in the United States. So you could have a choice of owning a third of all the stocks in the United States, or you could have a choice of owning that little block of gold, which can't do anything but kind of shine there and make you feel like Midas or Croesus or something of the sort. Now, for $7 trillion, there are roughly 1 billion acres of farmland in the United States. They're valued at about $2.5 trillion. It's about half the continental United States is farmland. You could have all the farmland in the United States, you could have about 7 Exxon Mobils, and you could have $1 trillion of walking around money. And if you offered me the choice of looking at some 67-foot cube of gold and looking at it all day, and touching it, fondling it occasionally, and then saying, do something for me, and it says, I don't do anything, I just stand here and look pretty. And the alternative to that was to have all the farmland of the country, everything, cotton, corn, soybeans, 7 Exxon Mobils, just think of that, add $1 trillion of walking around money. Maybe call me crazy, but I'll take the farmland and the Exxon Mobils. A productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time.